Good morning. I hope you guys doing well and welcome to today's edition of the London Session Open. Today is it's March 8th and it's a Friday and it's a NFP Friday as well. So it's going to be an interesting day today with the markets and we're seeing much more activity now than we've seen in a while in the world's biggest currency pair, which is the euro, which I'm delighted to see just because it's been such a boring last few months trading forex, and it could be really really interesting here to see what happens over the next few days. Okay, so let's just begin with the technicals of just the euro. As you know, the euro has been stuck within a range of 112.12 and 115.67 since October 31st. And yesterday we had that big bearish day here. The market was trading at 113.20 and trade as low as 111.79 or so. And what's interesting here, and what's the difference here compared with before, is that this is a macro fundamental shift in the strategy of the central bank of the EU. Like before, we haven't had like a lot of commitment from the bank, and what they did yesterday is announce that they're gonna lend money to banks. I think starting from September, and it's gonna continue until March. I think it's March 2020 or something like that. So they're allowing big banks or banks in Europe to borrow money, do that cheaply from the ECB instead of going to the market, and then the idea is that this money is going to be then lent out to the real economy, or at least to help the banks to grow back business and sort of build up their coffers again. So it's good, and it's some sort of a QE, uh, and sort of the last time when the EU started to do QE and things like supporting the market was when the market started to decline here. Now it's a bit different because in 2014, interest was much higher. But yeah, so we had that big push. And when when I think about it, everybody's sort of focused on what's going on in the US. But I don't know. I think it's like that. That's what I sort of haven't picked that up. I haven't actually studied it 100%, but my subconscious and sort of my collective memory tells me that a lot of these big moves, like these ones here, have been related to ECB doing something, not necessarily to the Federal Reserve raising interest rates. Because yesterday I saw some guys on Twitter, they were like, "Oh, super dollar." Come on, it's not super dollar. It's because the dollar was, yeah, okay, it was up against the pound, but it wasn't up against the Aussie dollar. It was up, not up against the New Zealand dollar. So it was the euro and the ECB that is weakening its currency. Now, let's see what happens. No one knows for certain what's going to happen. I think last time I got excited, I think it was here. I think. Well, no, actually, it was here. Last time I actually traded the downside, I think it was here, and that worked out for a day or two, and then 4 or 5 days later, we're pretty much back where we started. But now it's a bit different. Again, it's a macroeconomic shift, and that could potentially lead to a nice little decline here. And this is not like a rectangle, like textbook rectangle, but it's definitely a range, right? And it's sort of has tried to leave here, tried to leave here, then now it's trying to leave to the downside. So with the help of that range, we can have sort of a rough estimate that maybe we should be trading a 109 because difference between the low point and the high point of the pattern. So I'm quite excited here. Let's see what happens. I'm gonna probably give this a chance, a shot, and see what happens. I think as long as the non-farm payrolls sort of print in line, then people will more focus on what's going on at the ECB. But if the non-farm payrolls today print terribly bad, then we might actually go upwards here. But I don't think that's going to happen. The labor market in general is sort of the last thing that tends to move many times. And, for example, the economy improves and improves and improves, and people say like, well, the guys have been working overtime now for quite some time. In fact, they're working so much overtime that we can hire somebody to do that job, and then they hire someone, right? And then when the company's going bad, they're not going to start firing from like first week. Rather, they continue to work, and then 6 months, 9 months later, a year, they say, you know what, we haven't done nothing here, and most likely, unfortunately, we need to let you go. That's sort of what happens. So labor market data is a bit sluggish, so I don't think it's going to change too much. So I think the non-farm payrolls should probably print more or less as projected. Of course, if it doesn't print as projected, then we might stress the pair up to 112.67, maybe 113. And if we actually do trade above this level, so if we trade above 113.26, so literally just above yesterday's highs, then I think it makes sense to take a step back and say, okay, we're not gonna be bearish anymore. I think from a risk reward ratio perspective, you're looking at 3 times the money or something like that on the break to the downside. As well, I was looking up sentiment positioning across some of the bigger brokers, and about 60% of traders already yesterday were long. So I suspect maybe having 65% of people now being long, and it's a really typical retail that when the market gets these sort of tries to break out, that they try to add to the market because they bought here and now they're buying more here because they really want to get out of that position. And then the idea is that it jumps a little bit and then they get out at a good price. But what's happening here though is that it's a contrarian indicator. So yeah, it strengthens the case we're going to have a bearish move. Now this is your GBP versus the USD, and the trend is bearish below 129. Sorry, bearish below 132, which is this high up here. And I think the market could probably go up a bit and then probably lower. Given what's going on with the euro, if the euro indeed continues to trade lower, then we will most likely sort of see this trade lower really. And then focus next week is going to be on what's going on in Brexit. So I don't think there's going to be too much activity here. And again, trend is bearish below 132. I think we can drift a little bit lower. Dollar versus the Japanese yen is at the buy zone now. But we need to be very careful here. Like I was assuming this was going to happen a few days ago, given what was going on in the S&P. I did an article about it yesterday. I talked about the break here of the March 6th in the Russell 2000, which is this U.S. small cap index. Said this is probably, this is heading lower, and people probably want to buy down here at 1462. And what may happen with the S&P 500? Well, S&P 500 one day later traded below support, and it's now heading lower. So I suspect this can continue to go lower. I don't think the NFPs are going to do too much to change the sentiment here. And the S&P, we need to trade above 2782 at least to take out that high. And that means that the dollar yen here is going to be in a tricky situation where maybe the yen strengthens more than the dollar does. So while technically it's perfectly fine to buy here, if you look at the other markets, it's giving you a warning sign that it's probably not a good idea to buy just here. But I'll leave it up to you. The trend is bullish by 110.31. But even if the non-farm payrolls are really, really good, and you don't see this go higher, then you know why. It's because of the S&P 500. You need to have that little pullback in the market. And again, probably the euro is probably going to be a better pair to work with. Here are gold prices, and gold prices are swinging to the upside. This is 113.07. I pushed up the trend defining level, also the sell zone a bit. It's getting a bit cramped here. It's definitely a bit cramped, high, low. I still think we can go lower, but we need that pullback that we talked about. No one wants to sell after such a strong decline unless they're really sort of hurt and panic. They just need to close out their positions. So I still think we can go up maybe to first fib, which is 1307, and then maybe all the way up to 1323 or so. But as long as we're below 1328, then we're dealing with a downtrend, and I think it's probably going to go up, but then probably lower. Crude oil prices should pretty much stuck in a range here. They can go either way. It sort of depends. If stock markets like the S&P is just going to go down for a few more percent, then this could probably just trade sideways over the next few weeks and then maybe go upwards. But if the S&P starts to decline substantially and people start to get panic, then yeah, you'll have an issue. And we had some data from China published overnight. I think it showed that exports or trade, yeah, exports are declined with about 20% or something like that. Now, if you take both January and February data into account, I think exports just declined with 4%. They have the Chinese New Year um, in February, which sort of messes up the data. But people are a little bit concerned, like macroeconomic data indicators are not looking too good. The question is here as well is, is the data just telling us what happened, or we will have more of the bad? And it's a tricky situation. But yeah, what do I want to say with this? Well, if the world economy definitely is going to deteriorate, then we're probably going to see stock markets lower than probably crude oil. But my main scenario now is that we've seen the worst, and the worst is behind us. And I think that if Donald Trump and the Chinese government manage to figure out a way out from the trade wars, again, the sentiment can change really, really quickly. Tactically here to trade this, one can just work with a break to 57.89, which is this level up here. Okay. About the S&P, the best sort of scenario was just to short here yesterday. I did a little article about this, and I've been mentioning the same thing to you guys here over the last few days. If it swings up to something like the February 21st low or maybe 27.54, I think traders will try to sell here. And as long as you trade below 27.81, I think it's a bearish market. In fact, sorry, I'm just going to push this up a bit here to 27.99. Might swing up and then lower. I think the sweet spot here where people really want to buy, it could be here, but they're really, really good levels. So probably down here at 26.40. That's where you find the sort of first fib at 26.28. You have all these lows, and if it goes down, it's going to be interesting, because if it goes down and then goes upwards, have that massive head and shoulders, because we could just be creating that right shoulder now. And again, if President Trump and the Chinese government come up with a better deal to allow American companies like Apple, Microsoft, all these guys to do more business in China without technology transfers and all of that, then it would make perfect sense, right? If they have more access to the world's biggest economy, because that is what China is right now. German DAX, it's under pressure, very, very close to take out that trend defining level. And we're just seeing sort of negative price action in the US, and as well, I think even in the Chinese stock market, you're seeing negative developments. I think the Chinese stock market, I think it was the Shanghai, it was down with 4% at one point overnight. So this unfortunately, I think this is gonna be just a casualty, and might go a little bit lower, but then we'll see what happens. And I think that's pretty much it. Guys, do you have any questions? Just put them in the chat box. I'll do my best to try to help you. I think we have a new person here. I haven't seen this name before. Vela, welcome. Thanks for joining us this morning. We have as well Vincenzo, of course, Saeed, Taufik, Keith, Dan, James as well. So, okay, I think we're gonna wrap things up. I don't have any questions. Guys, if you ever miss any of these live presentations, don't forget to check out the ATFX UK channel. This should be this one. This is ATFX UK. The channel was just launched. I started to upload videos. If you subscribe to it, you can watch the recordings. The only problem though is that to upload and do all of that, there's a delay of about 2 hours because of the software I'm using. I get bonus points from Vincenzo for pronouncing his name correctly. Thanks so much, Vincenzo. I speak Spanish. Obviously, your name should be Italian, I guess. So it's not that difficult. Okay, guys, have a great day and a great weekend. Let's see what happens with the NFPs. Again, I don't think it's gonna matter too much, but hopefully, we don't get too doesn't get too crazy. Let's just take a look here. What is the market projecting? So the key or average earnings, that's important. So it should be at 0.3 or higher. This is what the Fed is looking for. If this goes to 0.4, 0.5, it's gonna force the Fed to potentially raise interest rates. Okay, and then headline figure is 180, which is not that difficult to hit. Now, if it goes below, say 100 or say 95, that's gonna scare people. So then, maybe the euro is gonna go up a bit. But if it's around 150, 160, it shouldn't create too much issues. And if it's 240 or something, I think the dollar is gonna gain. But we shouldn't read too much into it unless the numbers are in the extreme. Okay, guys, thank you so much, and I'll see you guys on Monday as well. Please like all the stuff I do on Twitter, all the stuff as well I do on we upload here, like the videos. It's very important to sort of boost that digital footprint. I just joined ATFX, and they want me to help them grow. And one good way is, we have more views, more likes, and things like that. So if you like this stuff and you want it free, then please share, because I do premium content and I do as well the free content. But the free content needs the views and the likes and the mentions to continue to be free. Awesome, guys. Have a great day. See you guys later on today or Monday. Thank you.